Good morning, everybody. I'm going to take a more measured tone today, I decided. All right. Well, yesterday I was busy writing MMT Trader Report. I sent it out to everybody on the email list, so I hope you have read through that. It's a great report. If you want that report, just go to my website, pitbulleconomics.com, and click on that link that says Get the 30-day free trial. Now, on to the topic of discussion. Last month, many of you may recall that I made a couple of videos actually, that I entitled The Great Unwinding Has Begun. This is back in mid-March when I said the whole entire Trump rally is beginning to unwind. And that was a very prescient call, and I gave my reasons for that at the time. And the reason was that coincided with the failure of Trump to get the repeal and replace Obamacare passed, with the what appeared to be a very aggressive policy decision to enact big spending cuts. And by the way, on the theme of spending cuts, just the other day, White House Budget Director Mick Mulvaney, he sent out a memo to all agencies and departments prepping them to prepare for big spending cuts. So, basically, the whole entire Trump rally was built on this hope and expectation of $1 trillion infrastructure spending and big tax cuts and that border adjustment tax and all that other stuff. So and the repeal and replace of Obamacare, and one by one, not that any of those things were necessarily stimulative. And, I went over all of those proposals item by item, and I broke it down as to how more likely than not they would not have been stimulative in the way that investors had thought. But that's besides the point. What happened in mid-March, a bunch of things, but basically I said the great unwinding had begun. And the S&P and the Dow had peaked out. We started heading lower. We had a rally again through the end of March, and the NASDAQ made new highs. But for those of you, I don't follow Dow theory, but if you want to use these cockamamie things, that is not a confirmation Dow theory-wise. You had the NASDAQ make new highs, but the Dow and the S&P had already made their highs and were heading lower. For me, I look at the fiscal flows, and I was telling you that the fiscal flows were very weak, and I called it that the great unwinding had begun. Little did I know, because at that time, really, it was about the kind of, sort of loss, a little bit of a loss in hope that the Trump program and platform would really play out in the way people believed, okay? And it was starting to be questioned. It was starting to unravel at the time. Little did I know that he was going to embark now into this, getting involved in Syria and sending strike groups to North Korea and all the thing, Trump campaigned, and I don't want to make this a political channel. This is not a political channel. This is an economic channel devoted to MMT and the markets and the application of MMT on the markets. But I have to say this because expectation and psychology plays in a lot to what happens in the market. Now, Trump ran on this great, and I was a supporter. Listen, hey, I'll tell you, I was a supporter. That's the operative word there, because I'm no longer. I mean, he's veered completely off course as far as I'm concerned. So now the military strategy, the neocons, the war hawks, they have total control over him right now. And so it's now no longer America first, where that phrase embodied a certain economic idea, like, let's rebuild the country, let's put people back to work, let's rebuild our infrastructure, let's do all these great things. No, now it's, let's shoot missiles into Syria. But again, that's all I'm going to say about this. The great unwinding has begun, and it began back in March. And I've been documenting this in the MMT Trader Report. I showed in the flows how, the flows peaked out at the beginning of January. Then they crashed down, but that was due to the whole IRS holding back the refunds. When the refunds went out, we had another bump up into mid-March, and then they peaked out at a lower level again, the flows I'm talking about, and they're rolling over once again. All right, and then we had a big spike in federal tax deposits, just sucking the wind out of the economy. And you see it, like right now, the Atlanta Fed has its growth for the first quarter at 0.6%, about a 0.5%. And last week it was like 1.2. They dropped it by 50%, just boom, just like that when they saw the employment numbers on Friday, which I called that too, okay? So this is what's happening right now. And, I've remained short. I told everybody, stay calm. You had a lot of fashionistas on this channel. You had people even who were former subscribers of mine coming on to try to disparage me, which I think is so nasty. I mean, it's so uncalled for. You want to move on? Move on. But, I mean, it's so nasty and uncalled for, all right? I just try to help people. I mean, if I try to help you and you decide to move on to something else, that's fine. Then move on to something else. But it doesn't mean you have to disparage me. I just try to help people. That's it. I don't understand the character of some people. It's really completely lacking in any character whatsoever. So anyway, that's what's going on. And I think now, and if you've been reading, and again, I don't want to get into politics, but if you've been reading a lot of this stuff online, especially from the alt-right movement, which, massively supported Trump. These guys are bailing. Everybody, his core supporters are bailing now. So you had, that's, if you think about psychology again and what pushed the market up and make America great again, and we're going to do all these great things and rebuild America, and now he's losing his core people because they are very, very vehemently opposed to the actions he's taken in Syria. And now this very, neocon shift that he's taken, all 180 degrees diametrically opposed to what he ran on in his campaign. I mean, you start to see the unraveling of the psychology. Like, people start to connect the dots. Like, hey, if he's going this way, then all that other stuff he talked about, that's done. That's finished. The tax cuts, the border wall, the repeal and replace, the massive infrastructure spending, the America First, it's all gone. So, and that's the only reason I'm talking about this. I'm going to go back to the MMT, but this is a psychological thing. Now, this is just getting started. Again, I'm telling you, because we got earnings coming up this week. We got 3 big banks on Thursday. And I've been talking about, and it's going to be interesting to see what happens with these earnings, because, Wall Street has a way of massaging these things, so it always comes out the way they want. And I'm seeing whisper numbers that are high, which is incredible, because you saw the collapse in credit growth. You saw the losses that they're sitting on with their positions. So I really don't know. But anyway, that's what's happening, and I called it, and a lot, sorry to say, but a lot more downside I see. And finish off with one last thing here is the fact that in doing my research over the weekend, and I've spoken about institutional asset managers were the major long in this market. If you look at the futures, S&P futures, the institutional asset managers, they were net long almost 700,000 S&P E-mini contract. Net long, that's longs minus shorts. Their longs alone were like 1.4, 1.5 million longs, but then they had shorts. But if you net that out, they were net long at the peak around 680,000. 85,000 of those net long contracts, about 12% of their entire position, is above where the S&P is right now. It's basically from like 1250 to 1295. I'm sorry, 2350 to 2395. They bought 85,000 net long positions. So there's this huge weight of long asset managers at the very top of this market. I told you not to follow these guys. I told you. When the market starts to dump, those contracts are going to be liquidated. We haven't even started to see the downside yet. We need to see some. If you get some bad earnings on Thursday, the bottom is going to open out from underneath us. That's all I want to tell you. I'll see you later. Bye-bye.